What is going on, guys? Sam Aker here, coming to you with a little impromptu live. I just really got the bug, to go live today. A lot of little things to talk about, jam-packed agenda. Obviously, drop in the chat if there's anything you'd like me to cover. I am happy to cut some of these things from the old agenda if they're not needed. But yeah, crazy times on the OTC. Never a dull day, really. I have my little list of notes off here to the side, and I can count at least seven or eight things I want to go through in terms of companies. And yeah, it's exciting times. I don't know. It's a bit of a weird time to be investing in the OTC. I wanted to just sort of start at a high level here, just sort of on what I'm thinking with the market, because people bring it up sometimes, and yeah, it's tough in the OTC small caps right now. A lot of deals I think out there to be found. If you're on my Discord, you'll know there's some companies I really like that are flying under the radar a lot. But I think just as a sign of the overall macro environment, there's a good amount of deals to be had, and maybe this is a good segue into sort of what I wanted to start with. Let me switch over to my other thing here. Sorry, I'm getting, there we go. So basically what I've got is there is a company, a research company, I think it's called Yardeni or something like that. Yardeni Research. So what they do, and this is all just like auto-populated, you can see one basically every trading day, is they auto-populate some graphs basically that show like market PE ratios, essentially, or PE ratios for the different, I guess, in a couple indexes. It's really like the S&P 500, the S&P 400, which is like a mid-cap index, and then the S&P 600, which is kind of like a Russell 2000 sort of smaller cap index. And what I wanted to show you is you can see sort of over time, and I don't know if you can see how well you can see this, but you can see over time basically forward PE ratios for S&P 500. Maybe I'll start with they had trailing in here. I thought maybe not. Trailing is usually a little easier, but I can do forward too. So it's just like kind of like the sum of consensus earnings. So what you can see is like, this is like, S&P 500. You can see it's sort of, you're probably fairly aware of how the PE ratios of the S&P 500 work over time. But essentially what you're seeing is like sort of reverting back to where we were in like 2017, you had a dip in 2018, if you'll recall. And then obviously it got really high post-COVID, and we had our big drop in early 2022, things like that. So what we're seeing now is I think that the market, with rates and everything going up and less of an appetite for risk, you're seeing a lot more, a lot of people moving away from smaller cap indexes and smaller cap companies in general, right? And you can really see it as you compare what the S&P 600 is looking like. Again, these are forward PEs, so take that as you will. But this is where we are today, right around a 12, 13 PE, right? Well below historic marks, right? Even in like somewhat of recovery periods or anything, right? You're seeing like 18, 15, 16, something. It's always going to trail the S&P 500 in general, but seeing it trailing like this is pretty crazy. And this is the S&P 600, right? So this is like companies that are much better than a lot of the much bigger than the companies that we're talking about a lot on here, right? Most of them actually I think it says between like 850 million and 5 billion market cap, something like that, right? So fairly small. And these companies are even like, people are not moving into these too much, right? So I guess what I'm getting at here is there's a lot of market data to suggest that people are just not going into small caps right now with capital. But it doesn't mean that there's bad companies in small caps. If anything, it just means there's less money coming into it. So I still think there's a lot of money to be had in the OTC. There's deals out there. You just have to be maybe a little more patient while we hopefully see less of a flight to larger cap stocks, essentially. So I just wanted to kind of frame all of this as give you my 2 cents on the market up front before we get into company specific things. By the way, if anybody has anything they want me to talk about in the chat, by all means, fire away. Let's see. First up on the list here, QIND. Yes, QIND. We are on to. So, basically, maybe I'll, before I jump into QIND too much, this was a super, what's the word? Maybe letdown, anticlimactic Q3. I guess, well, it's mostly Q3 earnings. The ones that were supposed to get released last week by the 5th or the 14th, maybe even the 15th. But however you want to count the days, 45. Anyway, basically none of the companies that I cover released earnings, or at least the popular companies that I cover released earnings. So I've sort of been like waiting around, like, hey, like, come on, like I got videos to make, whatever. So I was just going to take this time to just talk about them a little bit, give you my like 2 cents preview. And then we can go from there. I've got a few to rifle through here. It's all the usual suspects. So yeah, QIND is the first one I want to talk about. So yeah, they NT'd last week. It should be coming back around, let's see, 5 calendar day, market days, trading days from Tuesday. Yeah, so early this coming week, we should in theory have their Q. In general, from QIND, what's making me really nervous, and I think what's making the market pretty nervous, is we still are not there with an uplist. And I know they're working on it, and they haven't said it's off or anything, which is good. But I think a lot of people, including me, were really hoping they would be a little closer by now. The reason I say that, and this could always get revised, but the revised payment tranches, and I think you guys are probably all very aware of this. The really big payment, the $73 million, was due on or before the end of November, right? So what makes me nervous is that that's in like less than 2 weeks, and you have a holiday this coming week. So they can renegotiate it. I think it's probably in everyone's best interest to just renegotiate it. It seems like the partners the people they are purchasing the company from, or the controlling stake from, want this to get done because they've worked with them sort of so far. But I can see why the market gets a little antsy, and we're seeing a pretty decent drop in QIND price. And maybe I'll to remind myself where, we're trading around 20 cents right now, which is not great, to be honest. I think nobody probably wants them trading at, what is their market cap now? Like 25 million. Yeah. Not great. Sorry about that. So that's really what I'm looking for with QIND. I want any PR out of the company associated with the Q coming out. I really need something concrete on the uplist, because that's the only way they're ever going to raise this kind of money, is if they're trading on a bigger board. So with that being said, obviously we'd still like to see the business do well, progress, profitable, but I don't see why that wouldn't be happening already. They were already doing that beforehand. So nothing is telling me that this company is like going to start doing terribly all of a sudden. So that's QIND. I'll maybe do an ILIS one too. ILIS is a little harder. I don't know. So much of ILIS now is just QIND. And I know they're doing other things, and people probably don't like it when I say that, but it feels duplicative to me. So I try and focus my efforts on other companies first, just because QIND covers so much of it. And QIND is a little easier and more straightforward to to cover just because I don't know, it just is. So we'll see. If I have time and I can get it in, I will do a iList one as well. So that's QID. That's all I've got for now. We'll have to see when the Q comes out. I wanted to talk about Cirque. Good old Cirque recently has not been doing well, especially in the last few weeks, right? I think a lot of this share movement's from dilution and everything, but long and short, we did not get their quarterly filing. I was not surprised. They've been late. I think they were late they were late last time. And it's difficult because they've already released up their AS to 3 billion shares, right? I think it was up from 1.5 billion originally. We're already almost at 2. And I came out with a video right after everyone found out that they increased the AS, and I said there was going to be a ton of dilution, and there was. It's tough for me because people ask me about SIRC and what I think, and there's a lot of dilution, but you don't really, it's hard to tell what they're getting for it. Because dilution isn't always bad if you get a good deal out of it, right? And they had a ton of debt, like an astronomical amount of debt on their books still, like even at June 30. And we're now, this is such old data now. This is like 5 months old, but even at June 30, you saw like a ton of debt on their balance sheet. And like they've basically been converting all of that debt away. And it's hard to tell how effective the debt conversions are or if it's good for the shareholder because you don't know the ratios. They've got to be at some discount, one would think, but it's hard to tell. So I just keep telling everyone to wait until we get the Q because I can run some numbers on them and just see sort of effectively how much it cost everybody in terms of discounts. But their market cap is only $4 million now, which is a very far cry from where they were before. So, not great, but we'll see. It also doesn't seem like they're cash flow positive. They're still converting debt so much. I mean, I don't know when debt is coming due and everything. So we'll see. The other thing I'm sort of curious about is a lot of their convertible notes and notes are with Brett Rosen, the Brett Rosen note, because that was supposed to help them a lot. A lot of the friendlier terms from a lot of the, I call them loan shark debt. A lot of the loan shark debt they had, like the ones with like daily payments and like 45% interest and stuff. And I thought that was supposed to help a lot, but it seems like they're still converting a lot. And I'm wondering if that's still even going to be there or if some of that's being converted to, I don't know. We'll be able to tell from the key, but that's something that's kind of been in the back of my mind is like what debt is getting converted out here. So we'll see. I don't know. I don't have much hope. We've also breezed past the SPAC timeline of end of October. I know they said it can get extended, but like the fact that we're hearing like absolutely nothing and it's already almost December does not make me think that this is happening anytime soon, or maybe even at all. But who knows? So I think that's probably all on SIRC. I don't know if sorry if I'm repeating myself. I think someone on the Discord found out that they're bumping their AS again. If you're not on that SIRC Discord, you really need to get on there. They find some crazy stuff. They're incredible fact finders. So if you need a link to it, just ask me in my Discord page, and I can find someone who'll give you a link if they'll allow you. But yeah, I think their AS they're going to bump it up again to like 4 billion. I think was I mean, maybe misstepping. I don't want to bring up the Discord because it's their page, not mine. But someone can correct me if I'm wrong. So that's SIRC. The other one I wanted to talk through, and I'm sorry I have to open it up here now because I just closed out of it, was Alpine 4 quickly. Of course, it's not cooperating. Stupid Edgar. Anyway, we got an NT, which I was actually a little surprised about. they had all those problems with getting their Qs out, and not just Qs, they're basically all their filings for like a year because they switched auditors and they had problems with purchase price accounting and everything like that. But that's all settled, and it seemed like they were kind of rolling, and then we get an NT, which was kind of annoying, but because it's like, really wanted you guys to like get back in action here. And then we get an 8K on the same day saying that they entered into basically like a factoring arrangement, which means that they are effectively selling. I was talking about this in my Discord, but this looks like they sold a accounts receivable to a third party as like a loan. So like they had invoiced 1.48 million and they sold the receivable, effectively sold, like got a loan against it for like $1 million. So it's a pretty hefty interest rate if you do the math on it, right? Effectively an interest rate. So this was kind of like a double whammy where I was like kind of hoping they get their filings out on time, and then wham, they're like doing this, which maybe they really needed the money for something that they can earn a lot of return on, but I think they just needed cash quickly. And I don't know. It makes me nervous for the Q, how it's going to look. And I know it's already looking backwards through from July, August, September will be the Q, but seeing things like this come out does not make me think that they are, doesn't make me think that they're cash flow positive or profitable yet. They could be making good progress. They could have some good top line growth. We get good PRs from them. The thing is, we get decent PRs that show that they're making progress, and they have, but it's tough going. They had a pretty big uphill battle. They have some real dud subsidiaries that I think they're probably going to be gone. It's either MSM or Excel. I can't remember which one it is. I feel like it's Excel. Is very bad, but anyway. I don't know if there's really much else to say on Alpine 4. Don't expect to see drone revenue. That's another one I wanted to bring up. They said they was going to start shipping in Q4 or Q1. So that'll be very high margin. And if they can start getting more purchase orders from that, that would be good. Haven't heard any more PRs about it. Maybe they're going to wait until they deliver the first ones. I don't know. But anyway, I think that's all I've got on Alpine 4. Next up, let me check that. Oh, Alicia, thank you very much. You are amazing. Let's see, CYBL. That's right. I don't know if I said that out loud, but I was thinking in my head. CYBL is the last one I want to talk about here. Just as a general point, I've said before, my whole rule is that I really only want to cover companies that are current or pink current, just because you get better quality of information. You get any information. That's why I generally don't like cover shells or things like that or anything. And I was thinking in my head, I was like, CYBL's caveat emptor has been on for like almost a year now, and I've still been covering it, which is kind of like breaking my own rule. So I don't know if I'm going to spend too much time on CYBL going forward if this keeps staying on, just because it's, I don't know, it doesn't really flow with what I like to cover. So I'll still do the Q, and which they were late on, of course. So that's why I haven't released a video on it yet. But doesn't mean the company's not going to like. They could get the CE taken off anytime, right? I have no idea. But if it drags on even longer, I may stop covering CYBL, but we'll see. I know people like it a lot and they ask me about it a lot, so maybe I'll make this one little exception this time. So anyway, CYBL. There isn't really that. I mean, there's a lot to talk about in terms of PRs and everything that they've done. You can sort of see them on here, but I'm not going to sit here and regurgitate PRs, but there's exciting things going on with the company. It's just they have problems, right, with being a public company, like having a caveat emptor on for a year and releasing filings late, and I don't know, things like that. You know my thoughts on CYBL's management. I really hope they can turn around for a lot of people's sake, because I know people are really excited about this company, and it seems like it has a lot of potential. When you hear about what they've been doing, and mergers and drone deals and things like that, and it's really just kind of a shame that it came to this, because they have so much potential, and it kind of just got like because of all this. So I'll keep watching. I wouldn't invest even if I could, but it's a very fascinating company, and I think there's a lot to watch for with them. So I don't really know if there's really anything else I want to cover on CYBL before their Q comes out. I mean, really the big thing for me is allegedly there has been no drone revenue yet from the deal that was announced. Like, man, that was probably was that like a year ago? I don't know. I can't remember. And I don't think we've seen it. We've seen their financials not actually do that well, right? The business sort of stagnated, and I don't know. A lot of people on Twitter seem to think that it's going to come and it's going to be huge, but I usually don't like going off of rumor too much, but with a company like CYBL that has a caveat emptor, I feel like that's like even more reason not to like assume something's going to go off of rumor. So by nothing they've done, by the way, these are just people online, but anyway, I think that's really all there is to say on CYBL. Let me just check the chat here real quick. Michael Singleton, what's up? You always tune in. You are the man. Doug Christensen, ILSQND financials post tomorrow. Cool. All right, good. I sort of figured. I was trying to do the math in my head. I was like, it's a Tuesday. Like the 14th was a Tuesday, so 5 business days would be Monday. Yeah. So yeah, there you go. Like maybe I'll hold my thoughts on them too much. So if there's anything you guys want me to cover, drop it in the chat by all means. Wouldn't be a Sam Aker video if I wasn't talking about my two favorites. Maybe I'll start with my favorite RJD Green. I'll go quick on these guys. This one, I know you guys don't like it, but fun company. They released their annual report. I think it was actually a little decent. Yeah, end of October. I mean, they just keep plowing away. Profitable. Didn't really grow, but profitable. Squeaky clean balance sheet. They're trading around their book value. They announced, and I think this might have been the first time their software division, IOSoft, has like actual revenue coming out of it. I swear there might have been one other PR about it back in like 6 months ago or something. I can't remember, but someone can. I would say someone can correct me if I'm wrong, but I don't think anyone really covers it. So other than like a couple of people in my Discord. So yeah, that's good. I usually just assume their software, or I guess you could call it software, sub is just going to do nothing, but and just get no revenue. I just ignore it. But so basically, any revenue they're getting is like gravy in my mind. The real news I think that I want to follow is that they were supposed to have purchased a. I guess what would you call it? They're like an installation. I guess it says premier Midwest regional sales and installation firm that offers all fireplace and wood stove products and accessories. Closing date scheduled for November 2023. So I assume they meet their quarter ends November 30th. So I bet that this will close. They're trying to close it right at the end of their quarter, so that's clean for their Q2 because they're an August 31 year end. Small company. I think when you do the math on it, they say when combined, I think do they say down here? I thought they said somewhere. you can back into it. Yeah, 24.5% EBITDA. Yeah, the company is maintaining with Silex Interiors. Revenues will be over 7.9 million. Yeah. So not super big. It's not like going to be bigger than their base business, but very profitable. I think I put this in the Discord. I think I actually figured out what the figured out what the company is. I just did a little Googling and a little bit of whatever, internet sleuthing, all public stuff. And I think I might have figured out what the company is. I think it's like this company in Wisconsin. If it is that company, it looks pretty good because they have, good reviews and a lot of people go there, and it seems like a pretty legit thing. So if it's not that company, that's too bad. Maybe they should try and buy that one. But you can see in the Discord if maybe someone can tell me if they think I'm an idiot, and that's not really it, but I feel like it might be. So I want to see this close because they've been talking about acquisitions for a long time, and they really haven't done one since IOSoft in like 2016 or something. They've talked about they have letters of intent and stuff like that, which in the OTC, a letter of intent means like absolutely nothing in my mind. So that's RJD Green. This is my second biggest position on the OTC. And my biggest one, which I think probably more people on here would want to talk about, is ticker XALL, Exalis Holdings. Yeah. This company is actually picking up quite a lot of followers, I feel like, in the last 2 months. I feel like when I first started covering this company, I followed this company for maybe 2 or 3 years now, but I've really didn't start covering it until maybe 6 months ago, 9 months ago, something like that. And people were like, what the fuck are you talking about? When I would bring it up, and now people are I see a lot of people on Twitter post, popular people posting about it. And share price wise, they hit a low, and I averaged down quite a lot, which was nice. But they've just sort of sputtered around at a really low market cap. For those that don't know, it's $3 million, which is pretty low for a company that has. We'll quickly look at it because they just released their Q3 filing, and it was really well. It was really. I wouldn't say it was really good. It was good. They continued progress. It's 9 straight quarters of revenue growth, profitable. They're cash flow positive for the past 9 months, but they actually were not cash flow positive in Q3. And it looked in isolation, which I actually predicted. If you check out my Discord again, I'll shamelessly plug my Discord. It's free. Check it out in the links. You can see that I actually forecasted their financials almost perfectly, which is nice. Well, it's not that hard when they've sort of been doing, you can see it on camera, doing this for so long that you can kind of guess. But for a company that over the last 9 months has $13 million in revenue, 2.3 million in net gain. Before other 2.1 million after interest expense. And their market cap is $3 million. So part of that is I think there is going to be some dilution coming. I was forecasting that their outstanding shares would be something like 2.4 billion or something like that in the next 6 to 12 months as just a ballpark for acquisitions that they haven't issued shares yet for, and some debt conversions that are out there. So even then the numbers made complete sense to me. You can look at my past video on price target because I don't want to, I haven't done one yet on their new financials, but it's an exciting company. They've been doing a really good job. I think the biggest thing is they've been growing so much, and I know this is getting maybe a little dull, but this other current assets, right, is 3.3 million. This is all their receivables. And their liabilities are mostly just notes payable that are due or have already gone past their maturity date and are just accruing interest, right? And they've been growing so much that their payable days are very short because they're paying it's mostly just salaries and contractors. It's not like a manufacturer where you can purchase raw materials and you have 60 days to pay or something, and you can sort of it's a little cleaner. But when they're growing like this and they need to hire more people, it sort of eats into their cash flow a lot. When their receivables days are maybe 50, takes them 50 days on average to collect, and their payables days could be a week. or two. I mean, I don't know about you guys, but in America, we don't want to wait 60 days to get paid. So what's essentially happening is they're growing, right? So they have to spend more, and it's sort of eating into their any cash flow they have. So they're sort of like breaking even, having a little bit of positive cash flow, which is good. It's keeping the lights on and it's keeping them moving. They haven't had to really like issue shares for funding or anything, which is nice, which they may do, but they haven't needed it just to keep the lights on, right? So it's a self-sustaining business still. What's going to happen, I think, or what I'm forecasting at least, is I don't think their revenue is going to keep percentage-wise. I think it'll level off a bit. And as it does that, their receivables will turn over more, and they'll be able to hopefully just sort of be able to move this receivables balance to pay off a lot of their debt and sort of clean that up. So that's what I'm looking for probably over the next like 9 months, I think. And that I think will just ratchet down the risk of this company incredibly, right? Once they clear out debt. And I mean, even just as it looks now, this isn't even like really that bad, right? I mean, like a 3.3 million receivables balance on 13 million of revenue over the last 9 months. That's normal. That's like, you see that in like S&P 500 companies. Like the company I work for is public, and that's what our receivables sort of look like. So I'm not concerned in that sense. It's just, and maybe this is where we get into a little more of maybe why the share price was beat up a little bit more. They had been pretty confident earlier in the year that they were going to have more acquisitions coming through. And I know people in the OTC are like obsessed with acquisitions, or at least a lot of the people are. I'm more of a pragmatist when it comes to acquisitions. Like, find good ones, but don't just buy companies to like grow unnecessarily, right? So they had talked about more acquisitions and had really high revenue targets and things like that. And they've done a really good job, but they haven't really closed many of those acquisitions. Really, the only one they closed was this one just, was this on Thursday? It's a university consultant. So I think it like helps kids like get into college and, where to apply, how like what to put in your like essays, things like that. You can find this company online. It's a small one though. They said it's about $1 million in revenue and $250K. I assume he means profit, like net profit. But you can look them up. I think they're in Florida. Good reviews. It's a real thing, which is, you always have to double check that on the OTC when a company starts talking about an acquisition. You can't even find it. So that's probably why the share price has sort of gotten beat up a little bit. I usually don't like to even go here when it comes to why a share price is getting beat up, but with such low liquidity, I feel like this company has also just had been some conversions of debt, and I wonder if there was just some semi-aggressive dumping just to close out of positions and stuff from some people. So there's a guy in my Discord, Jason in LA, shout out if you're listening to this. I'm not sure if you are, but he did a really good, I think he is Jason, right? Yeah. They did a really good, a lot of good intel in there on sort of like volume and things like that. And some more of like technical things, which is not really my forte, but I really like this company. This is my biggest position on the OTC by far. I don't invest in much and on the OTC, and this is a pretty big position of mine. So check it out. See if you like it. I know most people don't give a shit, but had to talk about it because I know there's several people who are pretty devoted readers who like it, and I really like them. So more to come on this. I'll probably do one more video with price targets and everything on this one. Or maybe not price targets, but just sort of where I'm seeing things shake out from like a multiples perspective and things like that. So that is Exalis. Let me just drop back in the chat here real quick. Michael Singleton, I would like to get your take on BIXT Bioxytran. I feel like people have told you might have even told me about this. BIXT. I feel like this was one of those companies that I don't look at because I don't get it. Oh yeah, pharmaceutical, right? Yeah. This is I usually tell people I don't really do pharma because I'm not a scientist. Not very good at it. Yeah, it's clinical stage still, so they're not really doing anything yet. You can keep asking me about it, but I don't think my opinion is going to be quite poor for this one. Not gonna lie. Is there like a catalyst coming up or something? Is that why? Because I feel like I've heard other people ask me about this too. Usually they have wow, this is a pipeline. There we go. Now phase 3. There you go. Well, they're in phase 3. And then everything else is preclinical. Yeah. Yeah, I mean with these it's like I don't really know what there is to say, just because if I was like a scientist, I could like sit here and like read the results of their like different phases of study and tell you things, but I can't really do that. I'm not smart enough. So, sorry about that one. What did I have next? Okay. Popular stock. My buddy Eric over at BIFC. Oh my gosh. BFC, Buffalo Fireside Chats, just had an interview with the CEO of, the ticker is Song Music Licensing Inc. I know a lot of people who watch BFC too, so you guys probably listened to the interview. I talked to him before the interview, and I sort of helped him come up. I think I helped him come up with some questions and stuff. So I did read all their filings. I have not listened to the whole interview yet. Sorry, Eric, if you're listening to this. I made it like halfway through and then I had to go somewhere. So I will probably finish that tonight. But Song is a very popular company, as you'll see. They've sort of been having quite a big spike in volume over the last like month or so. For those of you who don't know, essentially what they're doing is they say they own the rights to a lot of songs, like the streaming rights and things like that. And basically they haven't been paid forever for any of it, and now they're basically going on a big lawsuit spree to get paid, and they say their claims are like $800 or $900 million or something, but like 90% of it is bad debt expense, or it's basically considered not recoverable. So there's only like 50 million or something. I mean, I'm generalizing the numbers here. That's the idea. That's the play here. Is it's sort of almost like a legal play, and they're doing a lot of other news things about like how they're going with the OTC classics. They're reducing authorized shares. They're putting a moratorium on reverse splits. They're going to do a buyback program apparently once they start collecting money. I don't know. It's a really popular stock. Be a little careful with this one. Watch the interview though. From what I had already started watching, I think it's helpful, maybe give you some context on what's happening in their filings. But I'll just be totally honest. I'm very skeptical of this company in general. So, and sort of if it really warrants all this hype, but we'll see. I mean, their market cap is only $8 million. So it's not exactly like a huge company. So when you see an $8 million market cap company and a company that has 900 million in legal claims, and I guess I know like most of it they say they're not going to collect on, but if they say they're going to collect on like 40 million and the market thinks their market cap is only 8 million, I think maybe the market is telling you something about either the market is completely wrong, which is probably what the CEO would say, and maybe he did say that on the interview, or the market thinks something is amiss here, which also could be happening. So I'll maybe leave it at that. So let's see. That was Song. I don't think there was anything else I wanted to talk about. Song. If anyone else has anything else, I only have one other company I wanted to talk about, and it's a complete out of left field company here. Yeah, no, I appreciate the ask, Michael. I wish I could tell you more about these companies, but I can't. these pharma companies. So, by the way, if you're watching this either now or on replay and you're not subscribed yet and you've made it this far, please subscribe. I would love to hit 1,000 subscribers. It's an important milestone on YouTube. And a lot of you guys who watch this are not subscribed. It's really easy. You just click a button. What's easier than that? IFIS. I like IFIS too. I think it sort of is in that science area where I don't really get it. It's hard for me to understand the science behind it, maybe, that he's coming from. Like, I've listened to all of the interviews and stuff around it. So, guys, sorry. IFIS is a company that's developing like cattle feed. It's like an alternative cattle feed that's, they say is like healthier for the cows, and which then makes your meat taste better and things like that. But it's sort of like one of those. It's like a big basically like a biology experiment or biology company, and that's sort of where I get a little lost. But it seems like a cool proposition if it works, right? I joked around. I don't know if this was on one of my last lives or what, but like, I live in like a super rural area. If you guys don't know that, I live like out in the sticks a little bit, and there's like a cow. There's like cows, like a bunch of cows, like right down my street. And so like the fact that I like don't understand agriculture that well is kind of like unfortunate, or maybe I probably stick out like a sore thumb when I go walking around. But it's cool. Like, I know that there are a lot of problems with cattle feed and like a lot of like geopolitical issues with that, like in Eastern Europe, about when it comes to feed and things like that. So it's a cool company. It's hard for me to like. I like to be able to forecast out and have an idea of sort of like how much money they can be making, what are their margins, and it's hard for me to do that with a company like that. So, but just like listening to the guy, if you haven't listened to his interviews, you should, on BFC. It seems pretty cool. So, I think I'll leave it at that. I don't know. We've been going for what? I had one other thing I wanted to talk about, but I think I might just do a standalone video at some point. It's kind of a juicy litigation thing, but with a company I've never really talked about. But it's a company I've followed for a long time and never talked about. So maybe I'll just tease it, since it seems like 45 minutes is probably long enough. If I was a college professor, everyone would be packing up to leave. So I think I'll end there. Like I said, hit the subscribe button if you have not yet, whether you're watching now on replay. Trying to hit 1,000 subs. Drop me any comments. Join the Discord. Great way to just chat with everyone. We have a great community on there. I like to keep it pretty inclusive, good opinions, bad opinions, within reason, right? I don't like people going like tinfoil hat like crazy, but join it. It's free. Check it out. That's all I've got. Thank you very much for watching, everyone. Have